Now, Maneesh Dangi and Swaminathan Aiyar discuss what's in store for this particular budget and what the government actually needs to fix, or rather, give a booster shot to the markets. Here's an excerpt of that chat.
Hi, Mr. Swami. Absolutely delighted to be there sharing a screen with you. Been a fanboy, grown, reading your Sunday Times articles. Today, our context is to discuss local macro in India and most importantly, infer what budget could do for either assisting the growth or what policy could do India right now, which kind of improves the sentiments because, markets are clearly disappointed with the ongoing evolution of current macro. So we'd like to hear from you as to one, what you think of growth inflation conditions in India. And in this setup, sir, what do you think, would happen in the budget? What is that market should be anticipating?
Well, I'll say this. This was a budget where Nirmala Sitharaman was getting ready to declare victory. She had said 5 years ago, I'm going to get the fiscal deficit down from 9.2% to 4.5%, even while increasing capex and having growth, which would be the fastest in the world. I mean, to do the trinity is very difficult. Getting a fiscal deficit down that much normally means austerity. But she was going to say, I have achieved the trinity. I am going to get the fiscal deficit down even while we've been averaging 7% and, capex has been growing. Unfortunately, I think her party is going to be spoiled by Mr. Donald Trump. In fact, it's already being spoiled. If you see the stock markets are falling, if you see the rupee is falling. So she's going to be presenting her budget in a background of a rather dismal picture where both the rupee and the stock markets are falling. And if you ask me, they are going to continue to fall for quite some time. We don't know for how long. But two things are clear. Mr. Trump is threatening to change the entire world's economic and trading system. Nobody knows exactly how far he's going to go. But if he's already going to put 25% tariff, even on his closest neighbors like Canada and Mexico, I don't think other people should expect that they are going to be treated very much better. Now, what is the impact of all this? Now, India is getting ready to mollify Mr. Trump and say, okay, we will cut this tariff, we will buy some more oil from you, we will buy some more apples and agricultural products from you. But the main problem, I do not think, is that Mr. Trump will be attacking India. The main problem, I think, is the overall macro impact on the world. Because of what Mr. Trump has already announced and what he is going to announce, world GDP growth, I believe, is going to slow down significantly along with world export growth. And the two together, I'm afraid, will tend to lower India's GDP growth too. Then the effect on the budget, less growth means less revenue, more problem on lowering the fiscal deficit, lack of fiscal space. I have a feeling that all these particular problems can arise. So the macro picture does not look very good. And if you see that the big question is how far will the markets fall, how far will the rupee fall? What is happening is that people believe that all emerging markets in such a difficult situation with all the uncertainties, emerging markets are risky and the USA is a safe haven. Because of this, all this money is flowing out of all emerging markets, including India. It is not just Sitharaman is to blame. Everybody is, all emerging markets are suffering, and as far as I can see, this has some way to go. Exactly how far it will go for how long depends on what Mr. Trump does exactly. But as I said, I would like to emphasize, we cannot discuss the budget without discussing this thundercloud hanging over the budget called Donald Trump.
I kind of appreciate, I pretty much agree to everything that you said. India sort of sits in the midst of a cyclical slowdown in a rather harsh global macro setup. Trump or no Trump, in any case, tight dollar and higher US treasuries were hurting. And on top of it, if, of course, if there is going to be a renewed tariff war, and in some form of industrial policies, I think India perhaps would not be able to withstand that well, which perhaps is the reason why, Indian markets are actually misbehaving, at least relative to what market had anticipated. But what are your views right now? And I think we get to budget in a minute's time. But it's interesting that you talk of Trump. There is also an argument, that some voices in India that you're beginning to hear that Indian slowdown is actually structural instead of cyclical. You sort of have an idea: is it just a sort of a cyclical dip that we are experiencing, or there could be something more structural underway? That could mean that the potential growth of the country itself is actually slower than what we all sort of believed in until about, let's say, 1 or 2 years ago.
Yes, well, it's a very important point that you have raised. I would say that, I have heard both points of view. There are the pessimists who say there is a structural problem. They said, we had a nice bounce out after COVID. We bounced back very nicely, but now quarter after quarter, growth is going down. Structurally, we may be going even further, and the arrival of Mr. Trump is going to make things worse. So some people recall 2019-20. In that particular year, things were supposed to start off well, but by the end of the year, it fell and fell all the way down to 4.9% for reasons that to me are still not entirely clear. And the question is that kind of thing going to happen? I don't think the problem is structural. Yes, there has been a slowdown in the last 2 quarters compared to the earlier year. This was partly because the figures of the earlier year were exaggerated by a GDP deflator, which was just exceptionally low. And because of the reversion to normal, one would have expected GDP this year to come down a bit. We now have these revised forecasts of 6.5 and so on, which might have been reasonable in the absence of Mr. Trump. And that would have meant that there is not really a structural problem. Anant Nageshwaran, the Chief Economic Advisor, he has said that he thinks that India's growth path is going to be average of 6.5%. And I don't think he is far wrong. I think, that is quite likely. And if we return to that path this year, when we are coming down from a high base, I think that would be an indication that we do not have a structural problem. The thing is muddied by Mr. Trump coming. So if the thing falls below 6.5 to 6 or 5.5, we will not know whether the problem is structural or whether it is the damage done by Mr. Trump. We may have to wait a little longer to work out where exactly we are going and how we are going.
So sort of, I pretty much agree. I am as one representative of market, sort of believe in the same idea that it's likely a cyclical slowdown. India has had a good 25-year track record of delivering 6 quarter, 6 half growth with a mild sort of 0.5%, 1% upswing and downswing. So I think it's something similar underway. But let me highlight a few points, just to play devil's advocate, not the reason of structural slowdown, but when someone points at numbers like as follows. Last 10 years, India growth is only 5.5% relative to what Nageshwar and many others actually argue it could the potential of 6.5. The car sales growth has been, in a volume terms, only 5%. Two-wheeler volume growth of last 10 years is only 2-3%. Same as with the staple businesses. In fact, our delta of India growth versus other emerging market in last 5 years has actually fallen versus the previous 5 year. Once you sort of look at all these numbers, even the sort of a hardcore believer and an optimist in India, such as me, sort of begin to think that, could the guy who is actually making an argument on the street that, there could be a structural problem underway, which actually began to sort of play out much before, Trump was elected. Is there a merit in this argument? Just dwell a bit deeper on it.
Broadly speaking, I appreciate your points. there are many mysteries in the Indian data which I find are unresolved. Like, for instance, the last household consumer economic survey suggested that the consumption of the rich is falling and that of the poor is rising, which is exactly the opposite of narratives and the kind of thing which will be told to you by Hindustan Unilever or by Nestle's. That same thing shows that inequalities are reducing, whereas the general narrative is that inequalities are increasing. So I will simply say that in the case of India, the data points themselves are extremely confusing and internally inconsistent and contradictory. In this particular circumstance, I find that, both the pessimists and the optimists can build a case for, is there a structural issue or is there not a structural issue? At this point, I will simply say that I do not think there is one, but I could be corrected. But we will have to wait for a little more time, and we have to get the data properly.